Welcome everybody to today's session of our series Sustainability is Better Business. Today we have as a speaker Nate Wyne from Floodlight Invest, who's going to talk about the value of data for companies. Unfortunately, we had a little technical issue, so we're re-recording the first part of this, but it should be no problem. So Nate, thank you again for taking the time. I give you the word.
Perfect. Let me share my slides here and we'll get going. Hi, everybody. You'll notice I changed my shirt during this session, but I promise it's the same person. So I'm excited to talk to you today about data. In general, what we're seeing for aggressive companies that are focused on making an actual impact in the sustainability space, looking at their data and then understanding how they can use it is becoming both the top challenge and the top opportunity. One of the examples that we bring up from history, which is really where my background comes from, is oil. If you look at what happened with oil, especially immediately preceding and during World War II, as major empires and countries around the world started to see that that oil was actually a lot more powerful and a lot more easy to ship and use than coal was, it really became a race to which country actually could shift its assets from coal to oil fastest. And some countries decided like, hey, this oil thing is just a phase. We're going to get out of this. We're just going to sit with coal because we have tons of deposits here. We don't want to have to buy from other countries, et cetera. And what we see from the lessons of history is those countries don't exist anymore or have been so significantly reduced that their inability to adjust to the changing market really pushed them into a terrible position competitively as well as historically. And as I move to my next slide here, the infographic I'll show you is carbon emissions. So this correlates pretty well with coal and oil, as you can imagine. But as you see the growing prominence of China in particular, but all of the developed world, you can actually see which countries really first jumped into this being what we call the fourth industrial revolution. So data itself kind of being the successor to what we can actually see here as global growth. Now, as we look at what happened in Glasgow at the COP26 summit, one of the biggest complaints from the developing world was that the developing world looked at the developed world and said, we really need you to help us pay for this conversion from coal or from more non-sustainable energy methods to more sustainability. And the developed world just looked at them and said, no, you have to do this yourself. But when you look at this chart and you see the countries that actually just came to this earlier and the amount of carbon in the air because of it, it's really hard to look at developing countries in the face and say, no, 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 you have to pay for this on your own. The same thing happens in miniature in companies. When companies really look around and they say, look, why would we change? Why would we pick a different supplier? Why would we hire a different team to focus on this effort? We're making money. We're on year 12 now of an economic upswing. Similar to what happened in World War II, if you don't bring in people that actually can see down the road in those trends, you're setting yourself up for more disaster. And I realize I'm speaking in generalities here, and I don't mean to scare people into being more sustainable. I genuinely do believe that sustainability is the best business. One of the things that Switzerland has done specifically to aid me in this thesis is you have actually passed significant legislation requiring disclosure. The US, Japan, Asia Pacific, more Australia, New Zealand than the rest of Asia have all flirted with this idea of forcing companies to disclose more what we call ESG, so environmental, social, and governance metrics. But in Switzerland, at least, you've passed the first laws that are requiring it for small companies. So as we move forward, these are good economies to watch, and these are good opportunities to look for, to see not just which countries, but which economies, which economic systems, and which people are actually taking the initiative in this space. Because I do believe that companies that start to understand their data and then use it effectively as a rule and focus that as much as they would on keeping gasoline in their car, if you don't have one, you can't make the other one work. As another striking example here, we have a quote from Jim Barksdale, who's the CEO of Netscape. And several of you are too young to even know what Netscape was, but it was all the rage when I was in high school as one of the first kind of forerunners of what the economy could do. This was a person, Jim, who really saw what the economy was turning into. And he highlights in this quote really the difference between data and information. And I would challenge each of you today to think about a brand or think about a company that you know of that really resonates with you. What Jim's quote here highlights is there's a lot of people who are more than happy to put up their hand and say, I have an opinion on this, or I think because I heard this one thing one time from one potential customer that we should change our whole business model for it. The biggest challenge of data is being able to read it in a statistical manner so you actually know that you're getting the undercurrent of where the change is actually happening, rather than just kind of taking a knee-jerk reaction to every opportunity in the market. The chart there on the right, I think, also highlights, again, I'm a historical nerd, for those of you who don't know me very well from the program. A lot of where I see the markets going is from a long scope of history. And if you look at how amazing it is to be alive in this time, if you look at major versus minor inventions, and major would be like the printing press, the airplane, et cetera. Minor would be smaller improvements in daily health, like medicines, et cetera. This is an incredible time to be alive. And this ends right around 2000. So we're 20 years past this chart. Being able to interpret the data that you have in supply and then being able to make intelligent decisions because of it is a huge opportunity for companies to really take a strong look at what data they're gathering and then make the effort to actually ensure that that's a sustainable focus instead of just a knee-jerk or let's just make it to the next earnings report call. If you look at leadership and if you look at opportunities for the people who actually make a difference and the companies who actually stand the test of time, it's when they had leadership that was willing not just to see the signs that were coming, but then also to take action based on what the data was telling them rather than their own very well-formed opinions. That leads me into my Los Angeles example. So I'll pause to the next slide. A fight several years ago with the company Waze. So you're probably familiar with Waze. They're now owned by Google. They were originally an Israeli startup to help optimize traffic. In Los Angeles, the Department of Transportation is not really loved by everybody in the city. It's not known as a city that's easy to get around in your car. And the Department of Transportation found that several Waze connections were starting to download data without getting express permission first. Those Department of Transportation officials went immediately to the mayor and said, you must stop this. We have to sue these people. This really should be blocked. They didn't even ask us. And the mayor at first was like, okay, let's think about this. And then he asked the public servants, why would we want to stop this? And they're like, well, they're not paying for it. They're making money off this. And he's like, but the goal is to reduce traffic. If we can figure out a way of actually sharing data back and forth that optimizes the streets and the transportation of the city in a way that reduces accidents, improves quality of life, and takes more carbon out of the atmosphere here, why don't we actually at least have a talk with them? So in the US, at least, this was one of the first major agreements where a city actually went to a startup, well, not a startup at that time, they were pretty mature, but really said, hey, let's share data back and forth to help each other with tow trucks, with accidents, with monitoring air pollution levels. And it really was a major success story, something that I and my family personally benefited from. Those are the stories that make the most sense to me. They're the ones that say, okay, this is a company or this is a city that's actually thinking for people like me. Putting your portfolio to work doing the same thing, again, relying on data. You want to see the results. You don't want to just hear a good story like the one I told you. You should figure it out and see what's working in your part of the world and then build on those. Rewarding companies with your money is the best way to encourage them to keep going. And then this last one, we're pretty close to time here. This one meant a lot to me. So when you're trying to define impact, remember that there's a lot of communities and there's a lot of risks at stake here. So this example is probably well known to you, but it's from several years ago. This was at Nelson Mandela, the former president of South Africa. This was at his funeral. Several world leaders spoke. This was the leader of my country at the time. And then the translator at his left knew completely no sign language. And so when he had zero understanding of sign language and was just making up hand signals that were wild. What ended up happening then was an event that should have been a beautiful memorial of a person who had gone through massive sacrifice and had affected significant change across multiple groups and represented a lot more, in the end was diminished because people had to accept data from someone who was unprepared. And for me, I don't speak sign language. I wasn't able to identify that. That had to be told to me after the fact. When companies, individuals, and data is skewed or misused or misrepresented in a way like this, sometimes people walk away laughing, sometimes people walk away thinking, missed opportunity. But in the end, what ends up happening is everything moves slower. That chart I showed you of innovations happening, that gets slowed down. That starts to flatten. When people feel like what their contributions are, that they don't matter as much, or that there's less potential, this is what can happen. So the thing to remember for your companies, as we've continued to evolve throughout this industrial revolution, is always watch out for obsolescence. Watch out for what parts of your company are really not paying attention to the data. So pay attention to what your customers are saying, pay attention to what the news is saying, and as an investor, reward the companies that are doing what you expect to be done, and keep that in mind with what you're looking for in profit. You don't have to give up alpha in order to make an impact. It does take a little more effort, or it takes a financial services firm that is looking to the future and understands the value of good data to ensure that what future your money is building actually aligns with your values. We're not the first company to do this. There's lots of companies out there. Our approach to data is to make sure that the data we provide will be able to help you drill down to actual impact and be able to see the people that are actually walking the walk, as well as just talking the talk. And the prize for everybody here then is the ability that we have to shape the future. Innovation will continue. We all have the opportunity to make sure that builds something that we all want to live in, or we're doomed to risk the same failures of the past. And I would challenge each of you here today, with your own financial footprint, but also in your job, start looking around for what is sustainable. What stands has your C-suite taken to say we're going to build a sustainable company? Do you think this is just checking a box by upper management, or are you seeing the signs at your company that the changes are beginning to happen to make sure what's actually getting done is in line with what those commitments are? The more we can keep companies accountable or make them hold their own standards by using solid data from a rational mind that actually has doubt in it to make sure that what we're given is true data instead of bunk, the more change we can affect and the more of a world we can live in that'll be happy for the effort that we did. I didn't mean to end on such a rosy note. We definitely understand what we're looking at is a lot of financial services industries and a lot of focus points, but we've invested quite a bit of our energy into making sure that our models, our data sets, and the importance of what we're doing is in line with what people care about today. The last part I would throw to you before we go to question and answer is to really make sure that what you want to do as a firm is very firmly written. So don't just wait for legislation to pass. There's new legislation coming on the books in January in Switzerland, and then later with the European Union that will force a lot more disclosure. The more you can see companies that are getting ahead of that regulatory whip, that's where I think you're going to find a lot more opportunity to align with the firms that really are looking down the line at a better future for all of us. Because in the end, that's going to be a much better business return as much as it is going to be a better place to live in. With that, I will close my slideshow here and open it up for questions. Oops, I will stop presenting too.
Thank you, Nate. So the floor is open for questions. You can just turn your mic. And if not, I can. One question for you, Nate. In your opinion, what is better, a company with standards or standards, but that fulfills these standards, or a company that makes big promises and says we're the best, the most sustainable, but it only fulfills
Sure. I'm only catching a little bit of that, but I think I know the direction. So in order to really hold companies accountable, you have to have a common standard, or you have to have a framework to really fairly evaluate one company versus another. So the most common of those in our market is the UN Sustainable Development Goals, or UN SDGs. But there are multiple other frameworks. There's SASB, there's TCFD, there's a lot more protocols that are coming into place. What I would recommend then to look at companies is to look at which one of those frameworks they're adhering to first. And then you can work with us. I'm happy to share my email as well to see which ones are actually forcing more change, which ones are more accepting. But then really look to see what they're actually changing. So a lot of the first disclosures really do require a lot of people to change and require more roles to be established around sustainability or ESG, et cetera. Look for those frameworks. Jörg?
But the problem I have, like, this was like too an easy of an answer because the sustainability goals are very high level. Yes. And they do interact among each other. For example, if I just pick out one, reduce inequalities, how do we measure this? So.
Yeah, great question. So one of the best measurements we've found for reducing inequality is finding companies that are actually transparent with their supply chain. So instead of actually using contractors in other countries from their sales market, there are easy ways to hide that with shell corporations. The companies that are actually bringing all of those arrangements for how they make a product, perhaps overseas, and bring it here, that lets you see how much they're actually paying the workers that are making the widgets. It lets you see how much they're paying the shipping from one place to another. And it lets you see the entire supply chain for if they think that's sustainable or if that's just something they would only do when no one has visibility. They are nebulous topics and there's a lot more data points that we can share with them, but that's probably the most obvious is what it takes for them to really sell their product. What is the human impact to each of those people in the supply chain? That's where we can get a lot more granular and we can show a lot more of what a company is trying to accomplish.
One could also argument, for example, the salary structure within the company is a form of inequality. In Switzerland, there was even a votation. There shouldn't be a factor larger than whatever between the lowest and the highest salary. If companies don't discover this, it's one thing, and the other thing is what is correct, what is equal, when it is right.
Yeah, that's the hard part. So there are a lot of internet-based companies that are essentially enabling whistleblowing, enabling people to go and explain what's going on inside of a company. The problem is with some of those, it's just kind of a place for people to sit with a psychiatrist and just kind of scream. There's a lot of info on several different websites where you can tell people were furious when they left a job or where this was essentially part of their catharsis. I think where I see the most opportunity is with firms that are voluntarily disclosing. So Salesforce is really famous for this. They were one of the first firms to actually publicly disclose the gender parity gap between men and women at their company. And when they did it, their shareholders were terrified because their stock took a dive because it really did show a massive advantage to men over women. But in the end, their stock actually was benefited from it because people said, like the CEO rather said, look, we realize there's a problem. We want to go public with this so that we can get the public's help in fixing it, and really took a lot more concrete steps. So for me, that's a very good sign of not just intelligent leadership, but also forward thinking. That appeals to me a lot more as a person, being transparent rather than hoping the secrets don't get out.
I have a question as well. My question is, you also look at how companies obtain the data, because I heard from an experience from another startup that they were talking with an insurance company who offers to their clients something related to, we plant a tree for every, I don't know, something, and they wanted to calculate okay, how have they contributed to reducing CO2? What is the amount, and kind of make a report out of that. And the startup said it's not that easy. Not every tree you plant becomes a full-grown tree, so you can't say one-on-one. So we cannot do that. So this company went with another startup who would actually provide the data that they were looking for, right? So how do you actually work with that?
Sure. So we take an approach where, very similar to what I was explaining in the slides, where you have to keep doubt always in front of mind. Because remember, at the end of the day, for a public company, most of these CSR, most of the reports themselves, and a lot of their public detail is meant to pump the stock, is meant to say, look at how great we are. So keeping that hat on first is the first clue. The second part that we do is we will look at all of the company's intention. So what if they've committed to be carbon neutral by 2030, or if they're going to adhere to some certain vertical or SDG by a certain year. We say that's nice, but then we look at their corporate record as well to say, okay, if that's your commitment, does it make sense in your corporate progression that you would be able to then say, great, we're going to commit to this? So carbon offsets is probably the most popular opportunity that way, because it's very similar to planting a tree, only it's a financial instrument that then is handed over. I would exercise a lot of caution there, because the offset market, some of the players are very legitimate, but there are several players that are essentially just handing you back a certificate without doing anything. So it is very much a new market, and there are players of all breeds happening there. The more you can actually ask, hey, prove to me what you're doing, and especially for a financial services advisor, they're on the hook for this. If they actually tell you, hey, we're doing this for this many dollars, and then they don't do it, that's a liability concern. So ask them for their detailed confirmation statements, not just a quote from the CEO, but what are you actually committing to in your agreement would be first. And then be really careful, the further away you get from the financial, the more challenging it is to quantify. Because as you said, if somebody plants 1,000 trees, but they plant them in a desert with no water, that accomplished nothing. So watch for those commitments that actually make sense and that would actually help a lot, because the further away you get from money, the more chances there are for kind of faking it. Does that make sense? Yeah, thank you.
I have a question, Nate. If we like as Kickstart, we are looking kind of, okay, how can we make the sustainability with the different partners, right? If you look at it like from the standpoint of view of the SDGs and like data and kind of the clarity, could you list like 5 companies that you're like, wow, these are so absolutely amazing, and these are the example actually that others should follow? Because we always hear about greenwashing, we always hear about the negativity, but are there also some really good examples that we can kind of focus on and kind of model it, let's say, based on it?
Sure. No, great question. I read a book called Trailblazer by Mr. Benioff, who's the founder of Salesforce. A lot of what they have done, I think, has been very bold. They've really tried to be as transparent as possible on sustainability, and especially on the S in ESG. The S, if you don't know already, is the hardest. When you actually are trying to measure things that the governments don't collect, then it's all in the company's best interest I'm sorry, I wouldn't say best interest. It's all in the company's court to say, okay, are we going to disclose everything and be fully naked to the market? Or are we going to kind of bite size it a little bit to hopefully get a bump in the stock? So they've done a lot of work that I think has been really helpful. I think that all of the FANG stocks, or I guess now we call it MANGs because of the change from Facebook to Meta, all of them really do approach this with a much more serious slant than perhaps more of the rest of them. The energy sector really does, especially the ones that have come under public scrutiny. So British Petroleum, since the Deepwater Horizon rig spill, has obviously paid out a lot of money in violations, but they've made some substantive steps as well in saying we don't want this to happen again. We do see with the data that we've collected a lot of companies that are repeat offenders because the fines aren't that big. Seeing ones like them that actually took a punch to the face, as it were, and fairly so, but then started changing their business practice is another good one. I was actually pretty impressed with engine number 1 when they pulled their move. They were actually a brilliant approach, because most of the market really saw all of the oil industry as all bad, and none of them would make a decision that was in the best public interest at all, and we should all divest from all of it. When you actually look at the data, it tells a much more interesting story, and what engine number 1 did was they actually created a financial argument to the full board first of Exxon to say, look, you guys, if you're looking 10, 20, and 30 years down the road, this business model doesn't make sense from a financial perspective at all. So let's look at that data first and then say, great, if we can make these changes, not only will we collect a whole new round of investors, but we'll also signal that we're humble, that we're able to change and new. So I could definitely go on, but those are 3 examples where I certainly wouldn't celebrate Exxon before, but the way they actually looked at a challenge to their board that was less than 2% of their ownership structure, that was a pretty significant bow to the market, and I'd like to see more of that.
Thank you.
Is a valuable theory behind this story that people first have to knock their head and be exposed in public, and then they become good citizens? Or how can they become good citizens before things like this happen?
Yeah, absolutely. They had to have their head knocked because environmentalism, especially in the US, has been a focus point since the 90s, but really was not powerful enough as a lobby until more recently. So unfortunately, there are a lot of companies that are now following in that wake. I think that, to your question, what I would be watching for now is more of the copycats. So look for the standouts, look for the old term companies that are still making profits the way they always have, and then look at the people they're hiring, look at the roles that they're going for, and look at their public commitments around sustainability. That's where you're actually going to see a lot more of either check the box or real impact.
If I understand it right, there are like 4 markets that could be dangerous or profitable for. So one is like the governance, like state governance. You get fines, so you don't want the fines, so you're acting. The second market is the financial market, so it's about risk, being successful there, access to capital. Then there's the consumer market. Consumers prefer or disprefer your product. And then there is the employee market, like people want to work for you or quit your company. Which of these 4 markets, if you need to put them in a ranking, what would be your ranking?
Sure. I think the market is certainly rewarding companies now who treat their employees better. That was not the case when I entered the workforce. So I'm 41. When I was first hired by a large corporate, I was very much taught that I needed to put the shareholders' interest first always, and that needed to be everything I cared about. That really has changed a lot now, to where if you don't treat your employees well, especially with as many people that are retiring, it's so hard to attract good talent to a culture where, especially on those websites I listed that are explaining company culture, if the culture is broken, that's really, really difficult if you cannot get good people to man the ship. I would probably put risk second in that. Understanding the risks to your business model are vital. And I think we joke about this a lot at Floodlight, but the idea of let the data decide. So if we disagree with each other, or we're arguing, or we have some kind of choice to make that's really important, how do we actually then make the decision? Being able to balance the risk with more data is vital. So I would put that as second. The third, I think, would be the consumer. So the ending purchaser of the client, the client itself. If you build something that's beautiful and nice and you think it's awesome, but nobody will buy it, you're not going to be around long. As an entrepreneur, we've certainly learned that part. And so that's probably the rank order I'd put those 4 in.
Thank you.
I guess.
Do we have any more questions from? Yeah, please.
I was just going to say that if there's no more questions, I'd close with one quote from one of my favorite authors. Excuse me, her name is Flannery O'Connor. She was active mostly in the 60s, but she said, "You shall know the truth, and the truth shall make you odd." I really liked that approach, because in our world, especially the one we were just kind of coming out of in this part of the revolution, we're pretty used to just accepting what's been given to us. The trust we've had in news organizations, in companies, in politicians, in structures has really eroded, not just because the people in those roles have sometimes struggled, but really because there's just a lot more doubt in the system. So being able to transfer that trusting relationship from saying, oh, they're the CEO, or oh, they're a founder, or they're the board of directors, to how much data are they actually showing me? How much information can I look at as a normal, educated, smart person and say, okay, I can make a decision on this? And how does that actually work for me? That hopefully in our lifetimes will not make you odd. That will make you somebody that everybody else is paying attention to the same way. But as a last challenge, I would say, learn the truth and find those data companies that are actually giving it to you straight. watch the companies that are trying to sell you into a philosophy or to a certain, maybe more popular frame of investing. It really should be centered around what you want to do. Oh, and I see one question from Regina. Can you write down, please, oh yeah, sure. I will send that over to you. It's called Trailblazer, but I'll put it here. And we can put that perhaps in the follow-up notes to the team as well, along with the slides. But it's a great book, and I really feel like it's symptomatic of the kind of leadership we hope to have across the board. People that are able to be vulnerable and able to admit when they made a mistake, but then able to engage multiple communities to come to a better solution. Excellent. With no more questions, I think I'll hand it back to you, Andreas, but thank you very much for the opportunity to speak today, and I'll share my email with you, but we're on this journey together and really appreciate the Kickstart community as well as the focus for all the other companies involved. There's a lot of great momentum here, so let's go build on it.
Thank you, Nate. Thank you for your insight, and I hope we can all take home the message that data is the most important thing, and we should look for data and not PR statements and stuff like that. So thank you again for your time. To everybody joining us online, next week we're going to have a talk about Technology Fund, a public instrument to support fintech, startups, and SMEs. So I wish you all a wonderful rest of the day. Thank you again, Nate, for joining us. Bye-bye.
Thank you.
It's here. I just actually sent it to Matthew, so you can